Yeah, you have to be very specific. Yeah. Like the bank isn't even going to give you any financing unless you're specific to the point that you actually have estimates or listings for what you're actually going to purchase. It's not just, hey, I'm going to purchase equipment for an estimate of $500,000.
I can see the whole wide world with these two eyes, and I can be whoever I want to be, 'cause it's my life.
Hi, thanks for joining us for another episode of Ask Spurrell CPA. Today, as the Edmonton business consultant, we're talking about the business plan, specifically the operations, facilities, and equipment. I have Denise here with me again. Denise, how long have you been here now?
7.5 years.
7.5 years.
Yeah.
And have we learned a lot about different types of equipment
goodness.
and facilities and stuff that we never thought we'd know about?
Yeah.
Yeah? What's some of your favorite?
I don't know. I guess like the medical and the dental, those ones are the big ones that we have, right?
Yeah, a lot of that.
They usually have a lot of equipment that they have to finance and get in before they can even see patients.
For sure.
Right?
We know what it costs and we don't know how to use it yet.
Yeah.
So that's about
That's
it.
Right.
The quote, it's a Zig Ziglar quote when it talks about planning. It says, when you stop planning and preparing, you stop winning. And 50% of all Canadian small businesses will go out of business in the first 5 years. And 29% of these failed business owners will list running out of cash as one of their primary reasons for failure, making running out of cash as the second most common reason for business failure. And the story that we have is we see business plans that don't take into account the actual location and facilities of the business when making these projections. Mm-hmm. And that causes them to run out of cash. So Denise, what are the questions that these business owners should be asking, regarding working into the facilities and equipment in their business plan?
Yeah. So should you be specific about construction or facility purchase costs for financing?
Yeah, you have to be very specific. Yeah. Like the bank isn't even going to give you any financing unless you're specific to the point that you actually have estimates or listings for what you're actually going to purchase. It's not just, hey, I'm going to purchase equipment for an estimate of $500,000. Yeah. We need to have it itemized in terms of equipment by equipment and actually have potential suppliers lined up actually giving quotes that they're actually going to finance upon. So the banks are not going to finance on an estimate at all. They're going to finance on very specific numbers, and from a business planning perspective and a cash flow planning perspective, we need to know exactly what those are, because these, facilities and equipment tend to have this really pervasive materiality. They're much different than missing the, if you miss a revenue or an expense projection by 10%, that's one thing. But if you miss the build out cost by 10%, when that build out is $1 million, that $100,000 can be catastrophic and cause you to run out of cash.
Yeah. Do you include location and facilities within the operation strategy of the plan?
That's usually the section that I have. So in a business plan, I have an operations strategy. And within that, one of the subheadings is going to be the actual locations and facilities and a space for a description about those location and facilities.
Will lenders generally want to know the square footage of the location?
That's one of the big ones. So if they're lending, especially for a purchase or a build out, they want to be able to conceptualize what sort of deal they're getting, what sort of price per square foot, because on the back end, they're analyzing the potential deal and the risks around the deal. And they want to make sure we're not building out a small space with marble floors everywhere and crystal chandeliers at every opportunity, and something that's not likely to provide a rate of return. So one of the things that they're always going to look at is the square footage for sure.
And so should you assume that the lender will know anything about the neighborhood?
You should assume the lender knows absolutely nothing about the neighborhood. And let's take this in perspective, because a lot of times you're going to submit this business plan, and you're submitting this business plan as an experienced professional in the industry. Whether you're a construction professional or a medical professional or any other business professional, you're super experienced in your industry and you're super experienced in your city. And you might even be talking to a banker who, your frontline banker is also familiar with the city, and they might, let on that they're experienced in the industry, but a lot of times that plant is going to go to an underwriter who doesn't even live in the same city. So it's an underwriter who works with the bank. So your banker sends it to an underwriter within their bank that likely works in a completely different city. So you should be very, very specific about the demographics of that neighborhood, and what the foot traffic is, or the car traffic is in front of it, or the income levels of that neighborhood. If they're specific, if they're critical to your business plan, you better outline them, because the lender is likely not going to know anything about your neighborhood again at all levels of that lender, especially the underwriter.
Are the number of exam numbers normally a constraint for medical practices?
Yeah, so the number of exams that you can actually, complete in that facility. So we start looking at the exam rooms and how long it takes to complete each exam. I mean, you need to know that, because if there's only a certain number of exam rooms and it takes so long to complete each exam, that gives you the number of exams that you can actually complete in that facility. It starts to give you like the constraint where it doesn't matter how much money you spend on marketing. You're never going to get above this level, because there's only so many patients that you can see at that facility.
Will the hours of operation set the capacity constraints?
Almost always, yeah. So the hours that you have, what time you open, what time you close, we start looking at that exam. Now we know the number of exam rooms, and we know the number of exams we can fit in a day. That's going to set the constraints for sure. Is those hours. So writing down those hours of when it's open, when it closes. Are you open Saturday? Are you not open Saturday? Are you open on evenings? Are you open Sunday? Those are constraints, and they should flow through to your financial projections, and potentially the lender is also testing the reasonability of your projections based on those constraints as well.
Yeah. So do many businesses have to extend hours to increase their revenue?
They do.
They don't want to hear that.
They don't want to hear that. They don't want to hear that. They want to hear we can go from $1 million to $2 million and work 10 to 3 every day.
Yeah.
And sometimes the answer is, we can hit your revenue projections, or sometimes the answer is you're going to run out of cash unless you start opening evenings, unless you start opening weekends. And it's often not the conversation that they want to hear, but it's often the truthful conversation. And there's no financial projection that you could assemble without a deep understanding of those hours and the capacity constraints that those hours represents. So often that is a realistic retort that comes back when people want realistic projections, and actually a solution to the problem rather than to be pacified. Is sometimes the hours have to be adjusted and expanded.
Yeah, that's right. So is it important to understand the capacity before doing financial projections?
Yeah, so doing projections before you understand, things like how big the space is, how many customers you can actually service during the day, what are the hours of operation, so you know how long that day is. To try to do financial projections before those things are understood, just creates unrealistic financial projections, and that creates that risk that you're going to run out of cash, right? And become one of those statistics, and become one of the 50% of Canadian businesses that go out of business because you didn't understand your capacity constraints, and thus your revenue and your income projections were completely unrealistic.
Mm-hmm. So does revenue generally increase suddenly even if the capacity is increased?
No. So you got to think of a business who's starting from scratch. They go from zero to they have all this capacity, but that doesn't mean all the customers just walk through the door. If you build it, they will come. Maybe eventually, but I think even in the movie it took a while. No one showed up for a long time, and they started to doubt themselves. So and in real business, it takes a while to advertise on that, and so that's just not just for new starts, but that's for existing businesses that expand their location and expand their capacity. Generally, that capacity is going to have to increase first, and the customers to fill that capacity will happen second. It's not realistic that they happen overnight, even if you have a bit of a wait list. Wait lists aren't like, existing customers, because some people on wait lists have found other solutions already, and even though they said they're waiting, when it comes time to actually start the service, they pull out.
Does any business operate at 100% capacity long term?
No, they never operate at 100% capacity long term. And almost every business plan that I look at that comes in from clients assumes that they're going to hit 100% capacity. That means they're never going to have a severe weather event. They're never going to have a major staffing problem. They're never going to have a health risk themselves. They're never going to take a vacation. The customers are never going to say no to them. They're going to sell every single customer, and they'll always be booked out. They'll never have customers who cancel them. It's unrealistic. So although you can hit 100% capacity at times, you'll never sustain that over the long term. So you have to assemble realistic financial projections that never get to capacity, whether that's 95% or 90%. Even though your goal is to get to capacity, you have to understand that you're going to bounce between somewhere less than ideal capacity and to capacity. There'll always be events that will happen that will prevent you from sustaining 100% capacity all the time. So I think that's what we have here today. As always, hit that like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And if you have any, comments, feel free to leave them below so we can respond back and use your input for future videos. Thanks very much.